great to have you back now, because I think the market is really, really on a very strong bull run. Your thoughts on what we're seeing? The rally is now extended to the 10th consecutive day.
Yeah, I mean, I think that there have been many positive drivers, for the market. I mean, I should point out that this is not happening on massive volumes. The volumes are still moderate, but we are seeing a consistent, steady bid from offshore investors. And, one must consider that this market is still a relatively small market, so they don't need to put too much money at work in order to have an impact. We're seeing a sort of return to stability for the oil price. We're seeing greater firmness and greater prospect in the currency, with the inclusion of Nigerian federal government bonds into JP Morgan's local currency bond index from October. This is also bringing inflows from offshore investors, almost out of necessity to some extent, which is supportive of the currency. So in an environment where the currency looks reasonably well supported, we are seeing investors kind of coming in and taking advantage of what is still relatively attractive valuations in selected names, particularly in the banking sector. Right,
and let's move on to the banking sector. Today, I really want us to focus on Guaranty Trust Bank. I'm sure you've probably taken a look at those numbers. Fantastic numbers for the half year, and really, really standing out in the banking sector is GTB. Share price is up 8% year to date. And I think for me, the big takeaway in those numbers, for profit, we saw them up to almost 45 billion for the half year, and that is up over 60%. I mean, those are the kind of numbers we saw, if you like, in the good old days of very strong growth in the banking sector. What is GTB doing that everyone else is not doing?
Well, the simple thing with GT is that, in an environment, a banking environment that actually is relatively uncomplicated. The operating environment is tough, but in terms of the products and the kind of execution that's required, we're not talking about, complicated products here. And GT basically benefits from being, a very consistent performer, doing the right things. I mean, what do you need to do in this market? It's predominantly a corporate market. We don't really lend tremendously to the commercial space. We don't lend tremendously to the retail space. So if a lot of the business is derived from corporate, then what do you need? You need low cost of funding. You need an efficient base, because the margins can be thin through the cycle depending on what's happening in competitive pressure. And GT has managed basically to consistently secure low cost funding, to build strong corporate relationships over a long period, to basically execute with discipline and maintain margins as a result. It has a strong presence in the corporate banking space on a branch network of around about 200. If you think about its peers, Zenith, First, and UBA, we're talking over 300, over 500, over 600 branches, which obviously is a different sort of cost-based experience. Cost to income of 41 or so percent is clearly by far the leading leader of the pack, and that is by far the strongest KPI versus competitors that GT Bank has.
No, clearly it stands out, and it's quite amazing what you're doing. But your thoughts on the valuation, though? I did mention that the market has rewarded it with an 8% rise over the last 2 weeks, clearly on the back of those numbers. Your thoughts on where GTB's value sits right now? Of course, it's trading at a premium to the market. That premium seems to be justified by its performance, but do you think it's still good value at these levels?
Well, obviously we'll be reviewing all of our models. I think we're still waiting for Access Bank, but we'll review all of our numbers and kind of put something out once all those numbers are out. Obviously, the price to book of around 2.1 or 2.2 as it stands now is significantly higher than its closest peer. I believe the next highest valuation is Zenith at 1.3. I think the point is that GT has a long history and it's delivered consistently over a period. So this has meant that offshore investors in particular take comfort in the name, and the investor base is steady, and people feel that they are being rewarded for the risk that they're taking. The kind of returns that GT is generating is the kind of returns that a number of Nigerian banks ought to be able to generate on a consistent basis if they are executing well. But GT seems to be the only one that has been able to do it over such a long period of time, and that is basically what attracts the premium. I think that in any banking sector holding in this market, GT is a necessary part of it. Yes, the price is quite full, but it forms a consistent base holding for for the Nigerian market. I think if you're looking for upside, I wouldn't be overly weighted towards GT right now. I'm probably looking more at a name like First Bank that I think still has more juice in terms of a repositioning story. Right. And at 1.16 times book, I think obviously there's more upside to come there. But GT is, I think, for sure a core holding if you want to have a selection of bank holdings in the Nigerian market, without a doubt, notwithstanding the valuations.
Now, clearly the performance is awesome. We've seen efficiency levels that really stand out when you look at it within the peers in the banking industry. But the question for me is, can they sustain this? I mean, can we continue to see cost-income ratios at the levels you mentioned? Can we see ROEs at the levels that we're seeing for GTB? Do you think this is a sustainable move to the upside?
Well, I'm not sure that GT will continue to produce ROEs of sort of effectively getting close to 40% ad infinitum. I think that what is happening now is that this is an attractive environment for large banks, in the sense that the yield on fixed income securities, for instance, has risen. If you have high liquidity in your net placer of funds, the interbank rate has been attractive. If you are still growing your loan book, then the yield on your loan book ought to be gradually increasing over this period. And if you can do all of that with an efficient cost base, then you will kind of get a disproportionate benefit at this time. What is happening with other banks is they don't necessarily have all of those ducks in a row simultaneously, so the benefit is not maximized. So I don't think that this tight liquidity environment and this relatively high interest rate environment will remain ad infinitum. So I would say that I think over the medium term, I wouldn't necessarily say 37, 38, 39% are sustainable ROEs for GT, but certainly the sort of high 20s to low 30s on average, I think, for a bank with this efficiency of platform and strength of customer base is probably sustainable.
Well, even if they don't sustain it going forward, clearly it's something really good for the market at this time, and we'll see how the market plays into next week. Perhaps we'll see an extension of this rally